Good afternoon, everyone, and welcome to the evening session for today's seminars. We are talking recovery of loss, expense and global claims, particularly with an eye to the COVID pandemic and how that's affecting things. And this will be presented by Ryland Ash, Managing Partner at Ash. As usual, if you could submit any questions you've got for Ryland via the Q&A tool in the bottom panel, please. And then at the end of the session, Ryland will do his best to answer as many of those as possible. So in the meantime, Ryland, without any further ado, I shall hand over to you.
Thank you very much, Julie, and good evening, everybody. Welcome to this evening seminar about loss and expense and global claims. My background, for those of you that haven't been to one of my seminars before, is as a barrister. I then qualified as a solicitor. And then worked my way up the ranks here at Ash. Over the years, I've dealt with countless claims for loss and expense, and one of the most common challenges to a loss and expense claim is that it is a global claim, and that can often be a fatal challenge, which will defeat such a claim, but not always, as we'll see today. As I take you through some of the legal principles surrounding this issue. So hopefully you can see my slides and you haven't been too terrified by the photograph of me at the beginning. So the first thing to really grapple with is the basis of making a claim for loss and expense. Now, loss and expense claims can be made either under the terms of a contract in respect of express provisions, for example, within that contract, or it may be that you also have rights at common law, which exist, essentially they're invisible, but they exist nonetheless under English law in relation to contractual works. So it's important to understand that even if the contract doesn't say that you can claim for something, it doesn't mean that you can't. It may be that the law, the common law, will help you out and cover off the gap, as it were. Now, in terms of what the contract may say, obviously it depends on the contract. Some contracts have very clear specific provisions in relation to loss and expense, such as the JCT forms of contract, which talk about relevant matters, capital R, capital M, and then you'll have within the contract clauses within section 4, you'll have definitions of each of those relevant matters which give rise to a right to bring a claim. And then you have other contracts which are perhaps not so well drafted, maybe very simple, and don't have provisions that necessarily cover the scenario that may have arisen. And as I say, in those situations, you may want to fall back on the common law. Now, what the common law says, one of the most obvious rights to bring a claim for loss and expense is that a party who's engaged another party to undertake works must not prevent or hinder that party from carrying on with those works. So on a basic level, if you invite somebody to renovate your bathroom and you don't give them access to the house, you've prevented them from undertaking the works. And so they may bring a claim against you for losses that they may incur. For example, if you don't ever let them allow them access to your property, then they may say, well, I would have made a profit on this job and I've lost the opportunity to make that profit. On a more sophisticated level, on a large project such as a railway infrastructure or renovation project, it may be that a party has hindered the progress of the works by a failure to provide information, is probably the most common, or a failure to provide information in a timely manner. In other words, causing disruption and or delay. And I'm going to come back to that point about disruption or delay because there's an important distinction in relation to those two things to be made as well. So the bottom line is that you've got either rights under your contract or rights at common law, and you can bring a claim under either one. The other reason, which I think is a very important one, that you might choose to claim at common law as opposed to under your contract, is if your contract has very specific condition precedent clauses or notice clauses. Those of you listening will know that many contracts will say, especially if they've been written by good lawyers like myself, they may say, you have to give notice within 7 days of a breach of contract, or 14 days, or whatever it may be. If it's an NEC contract, within 8 weeks, or another period. And if you don't give notice in accordance with those provisions, you can't make a claim for loss and expense. So they're known as condition precedent clauses, which means if you don't comply with the notice provisions, your claim will fail. Now, if that's the case and you can't make a claim under the contract, so long as the contract itself doesn't exclude common law rights, you can rely upon the common law in respect of breaches of contract. In other words, you can circumvent those condition precedent clauses, and that's often a very good way to get around very strict notice provisions that are often added by way of schedules of amendments to contracts. Those of you familiar with the NEC contract will know that you have to give notice within 8 weeks, or you lose your entitlement to make a claim for a compensation event, unless there was an instruction to undertake that particular change or piece of work. And in that case, you can rely upon the instruction. So useful tips there, I think, in relation to bringing such claims. The next slide here really breaks down what are the basics of bringing claims for delay and or disruption. And at this point, it's important to distinguish between claims for delay and claims for disruption. So first of all, you have a delay claim. Now, a delay claim is often described as an extension of time claim. An extension of time claims will be brought under a contract for the extension of the contract period. And that contract should specify on what grounds a claim can be made. So it will say, for example, in the event of a variation or an instruction or a change to the conditions for the works or any other act of prevention by the employer or the main contractor, you can claim an extension of time where you can prove that that event has caused a delay to the completion date. So that's very separate and distinct, because what those claims are about is effectively a defense for the party making the claim to a claim from the other side for liquidated or delayed damages. So in other words, you're putting forward a claim because you want more time so that you can defend a claim from the other party for saying that you're late. And delayed damages in that context are one of two kinds. The first is they might be liquidated damages, where the contract states what that amount is and to which period that it relates. So for example, £1,000 a day or £1,000 a week, or whatever it might be. And then the second kind of delay damages are where the contract doesn't specify a liquidated figure, and the damages are known as unliquidated or general damages. And that's where the client, the employer or the main contractor would say to a subcontractor, you've completed these works late, you're in breach of contract, and as a result, I'm claiming damages. So that would be a claim for delay, and it would be a claim that would be a good one unless the contractor or subcontractor can show they're entitled to an extension of time. And to prove a claim for extension of time, the party making the claim will have to demonstrate that the events have impacted upon the critical path for the works and then changed as a consequence the completion date for the overall works, if there is one, that's been agreed in the contract, or if there are sections, for example, sections or key dates have moved as a result of that event. So that's delay claims. And what we're talking about today is loss and expense. And the first thing to say about loss and expense is that loss and expense can be incurred within the original contract period. You can have disruption, for example, that relates to a loss and expense claim within the original contract period, where, let's say, you didn't have access as expected. So you're working on a platform, let's say a railway platform, and you're expecting access to come from both ends so that you got free access across the platform. And it turns out when you get on site that actually you're only going to have access through a small area at one end, and you've got to get in and out of that area. And suddenly there's disruption in your works. Now you complete those works within the same period, but it costs you more money as a result of this event or matter. So you can have disruption within the original contract period, and you can make a claim so long as there's a breach of contract or a right, remember, under the contract that allows you to do that, such as a variation or an instruction. The second part of this is that you've got, under the contract, you've got your right to disruption, or at common law, you've got your right to disruption. The second part of this is the delay aspect. So we talked about the delay claim itself, as in an entitlement to extra time or not. But within that extra time, within the delay period, if we call it that, there are other costs, and they are often known as prolongation costs. And that's a form of loss and expense, but it's a different type of loss and expense to disruption. So on the one hand, you've got delay-related costs, which, for example, would include the extra costs that you've incurred within the delay period, such as a contribution to overhead, so long as you can prove that it wouldn't have been incurred in any event. The loss of other forms of income, loss of profit on other projects, if you can prove that they would have been incurred but for the delay. And within the delay period itself, if your costs go up, then again, in principle, you can seek to recover those costs, but you have to prove those costs for that extra period. So you've got the delay-related loss and expense, and then you've got the disruption-related loss and expense, which, as I say, could be within the original contract period. Disruption, confusingly, could also be within the delay period. And disruption can be described as I mentioned earlier, changing the working sequencing, which makes it more difficult, requires more resources than originally anticipated, or it may make you less efficient, so that you need more resources to get things done. So to prove a delay claim, you need to show what was intended and what actually happened, and the impact of those real events on the completion date. To prove disruption, what you're going to need to show is what resources you originally intended to deploy, whether they were reasonable, and if they were, what resources you actually had to incur in relation to the events that happened throughout the period that you say caused disruption, changed the working processes, and made you less efficient. So in both cases, it is a comparison between what you intended and what actually happened. And the key thing to remember about loss and expense claims is that they're really only going to succeed where the claimant can show, by way of evidence, what happened on site, when it happened, how it happened, and what the effect was in terms of the work. And so documents, evidence, records, all of these things are going to be absolutely critical to prove a loss and expense claim. And any such claim, whether it be delay or loss and expense, has to be proven on the balance of probabilities under English law, which means, is there a 51% chance that it's more likely than not that these events caused you to incur this extra cost? You then prove the extra cost, you prove the link, which is called the causal link between cause and effect, which is the cause and then the effect in monetary terms or in delay terms or in terms of disruption, and then prove the actual loss. In respect of each allegation, what's the cause, what's the effect, and where is my proof? If you can do those three things in respect of each of the items that you're claiming for, then you've got a very good chance of bringing such a claim and succeeding in recovery. So going back to the slide, you've got liquidated damages for delay, you've got general damages, which I'll talk about in a bit more detail in a moment, in terms of what you can recover at law. And then the third point I've identified here is a value as opposed to a cost. So many contracts will talk about, how to value a claim. And by that, I mean, if you look at, for example, variation provisions, they'll say this is how one should value a variation, the valuation rules under the JCT, for example. And so if you're making a contractual claim for a variation, then you'll use the values in the contract. You've agreed effectively a way of valuing that work. But if you're talking about a loss and expense claim or a claim at common law for damages, then you should be looking at the cost, which is to say what you can prove has actually been paid for these works. And that's an important distinction. And it will depend on the nature of the claim as to which one applies. But in simple terms, claims under the contract where the valuation rules are specified are for values, and claims where the valuation rules are not specified or at common law would be for the costs. And obviously you have to then prove that cost. And if you can't prove the cost has been incurred by that party, then your claim is not likely to succeed. So in a bit more detail on liquidated damages now, liquidated damages clauses stipulate that a certain specified sum of money will be payable by one party to the other, where there's been a particular breach of contract. What English law says is that you can't have a penalty clause. That wouldn't be valid under English law, unlike other jurisdictions, such as in the US, where you can have penal damages awarded to punish someone for doing something wrong. But here we don't have that. We have provisions that should be fair and reasonable and commensurate with the crime. And so you have to show that a liquidated damages figure, whatever it might be, is fair and reasonable. And if you can't do that, then you're at risk of it being a penalty clause, which would not be enforceable under English law. And as in many fundamental examples of English law, we go back a number of years. This one is 1915, the Dunlop Pneumatic Tyre Company versus New Garage and Motor Company. And what this case established is that in order for a liquidated damages provision to be enforceable, i.e. not a penalty, the sum must be a genuine pre-estimate of the loss. And the intention is obviously to threaten the guilty party into performance rather than compensate the innocent party. So the reality is that these provisions will be upheld as long as they're a genuine, reasonable pre-estimate, and you don't have to prove that the loss has been incurred, because effectively you've already agreed from the outset of the contract that this is the figure that will be paid. Now, this concept has been developed somewhat over the years, and you'll see from the next slide that the Supreme Court of England has taken an interest in this. And this is a case that's close to everybody's hearts, which relates to parking tickets. Certainly close to my heart anyway. There are a few things that I hate more, but there we are. If it stops people from parking across places where ambulances and other emergency services have to get to, then I guess it's all worthwhile. So in this case, there was a challenge to a parking ticket that had been issued, saying that it was a penalty and that a £50, I think, administration charge for issuing a ticket is just unfair, because they couldn't prove either that this was genuine pre-estimate of the loss or that it was fair and reasonable in all circumstances. And so it went all the way to the Supreme Court. It was actually a joint appeal before that. And so the Supreme Court slightly modified the rules in relation to liquidated damages, and it held that the test of whether a provision is a penalty is whether it imposes a detriment on the contract breaker, person in breach, out of all proportion to any legitimate business interest of the innocent party. And so on this occasion, the courts decided that actually the parking ticket was valid because there was a legitimate business interest being protected. So in that sense, when you're looking to draft a liquidated damages provision to put into your contract, you need to be careful. You need to be able to demonstrate that it's a genuine reasonable pre-estimate of the loss, and or there's a genuine legitimate commercial business reason for doing so. But in my view, this judgment has actually made it a bit easier for parties to include penalty provisions rather than more difficult. And so as long as there's a commercial case for deducting a certain level of liquidated damages, then the likelihood is that it will be valid. So if you're responsible for preparing these types of provisions, you need to avoid specifying sums payable upon breach which is so high that they cannot be seen as commercially justifiable or a genuine pre-estimate of the loss. And different types of breach should generally attract payment of different sums in order to be regarded in each case as a genuine pre-estimate of the loss. So you can't just say 10% of the contract sum applies to every failure. And there are lots of examples of these types of provisions failing over the years. One of the most famous is in a case of Bramall and Ogden, where there were sectional completion provisions in a contract and liquidated damages provisions. Because the sectional dates in the contract didn't work logically, it meant that the liquidated damages provisions failed as well. So it's not just about the liquidated damages provision itself, the whole mechanism of applying those liquidated damages also has to work. And if the mechanism fails, going right back to the completion date, if you stipulate a completion date that's not clear, or a completion date is in place that suddenly is rendered at large because of any reason, perhaps, for example, you don't have adequate extension of time provisions in the contract. In those cases, all of the rights fall away, the liquidated damages provision will fail, and then you'll fall back to a right to general damages, which I'll come on to now. So the next thing to consider when deciding whether to bring a claim against another party is to consider causation and obviously the level of damages that you can recover. So causation is an essential ingredient in bringing a claim for loss and expense. And what it means is that, as I mentioned earlier, you have to demonstrate cause and effect. That means a link between the event, if it's specified in the contract, and the effect of that event on the works. Cause and effect. And if you can go one better, I always say it's good to link clause and effect. If there's actually a clause in the contract which allows you to recover loss and expense, then link that with the effect of that clause. And if you can then prove the loss, then you're on your way to succeeding in your claim. So causation is a key provision that you need to satisfy. The other thing is damages. What damages are actually covered? There needs to be obviously proof of those damages, and you need to demonstrate what those damages are. Now, in terms of what damages you can recover, this is a question of what the law says you can recover. And the key case, again, is another cracking old case here, Hadley and Baxendale, 1854. This is a case about an old water mill with a big wooden wheel inside a building that was used to power a grind, and the grind was used to grind up meal from the fields, and then it can be sold on for flour and for animal fodder and various other things. And what happened is that the crank that was built inside the water mill cracked one day, and so the owners ordered a replacement from London, and this mill was out of town. So the courier who was engaged, Baxendale, agreed to supply this replacement piece, and he agreed to supply it within a certain period, and they delivered it late. For whatever reason, they were travelling up canals and by donkey and horse and cart and various other things. Who knows what happened along the way, but they were late. And so because they were late, the owner said, well, you've performed late, and as a result, I want to recover my commercial losses. I was making £50 a week from this business. I've had to down tools for a week. You delivered a week late, so I want £50 from you in damages, please, because it's all because of your late delivery. And what the courts said was that you can't just recover any damages from a party that's in breach of contract. First of all, there's a two-stage test here. First of all, you can recover damages that are fairly and reasonably considered to be arising naturally as a result of the breach of contract. So is it a direct result, in other words, which this loss wasn't necessarily, because it was consequential in terms of the business. And the second strand of the test was such damages as maybe reasonably have been supposed to have been in the contemplation of both parties when the contract was made. So was it within their minds when they entered the contract that if this was delivered late, that these losses would have been suffered? And it was decided that they weren't. If it had been specified from the outset that any failure to deliver on time will lead to certain damages being suffered, and the courier knew that and accepted that risk and signed up to it and then failed, then there would have been an argument. But in this case, there wasn't. So important principles of law were established here, and they are that the loss that you're trying to claim for loss and expense can't be too remote, far removed from the breach itself. And if it's not within the contemplation of the parties, then it's not likely to be recoverable. So not too remote, not reasonably foreseeable, not within the contemplation of the parties. And if you can't overcome those hurdles, then it's unlikely that you're going to be able to recover what you're seeking. So in terms of damages, if a causal link can be found, the next step in the process is to determine the level of damages, which, as I say, will be dependent upon what is reasonably foreseeable. The basic principle with damages is to put the claimant in the position they would have enjoyed had the contract been performed. So had there been no breach, what would have happened? Where would you be? So the claimant must not be put in a better position than they would have enjoyed had the contract been performed. You can't have a windfall by way of a loss and expense claim. It can only put you back where you would have been. And that's an important starting point when considering what one can recover from in respect of a loss and expense claim. So the next part of the seminar is to deal with what's known as a global claim. And that's where effectively a contractor says, there are lots of things that have happened which have disrupted and delayed this project. I was supposed to have spent X, I've actually spent Y, and the difference is my claim. And that's a global claim as it's known. It doesn't sound particularly impressive, but in another sense, it probably has some truth to it. It's the challenge is really proving the link between the events that happen, the complaints that are made, and the losses that are claimed. And that's really where the challenge lies. So in a situation, the contractor may make a claim which is rolled up, known as a global or total loss claim. And the case law on this is interesting. It's developed over a period of years. The main challenge to claims like this is that they're not particularized, is that the cause and effect, as I talked about, is not evident. You can't show, you may be able to show the cause, but where's the effect? In very broad terms, you could say, well, the effect is the money, but how do you know that money wouldn't have been incurred in any event? That's the key challenge to overcome. So over the years, as I say, this is developed in most of the early cases. Global claims were not successful and they were often challenged. And the whole idea of fully particularized claims showing cause and effect for each event developed over this period as a result of that. In this way, employers often argue that the burden of proof is reversed because it's them and not the contractor who has to undertake a detailed analysis to show why the global claim is not justified. And employers argue that this amounts to them doing the contractor's job for it. Obviously, the approach should be, and this is a common mistake really, if you're an employer or a main contractor facing a claim, don't do the other party's work for them. If they can't be bothered to do it properly, then my advice is to challenge it as early as possible, so you don't give them an opportunity to make the claim any better. And you don't really want to write to them and tell them all the failures in their claim, because ultimately that will help them as well. So don't reverse the burden of proof. In my experience, challenging a claim early that's poor is a good approach to defend it. But if you're the one bringing the claim, obviously you need to get it properly prepared, otherwise it's likely to fail. Now, there's some useful guidance more recently on this concept of global claims from another fantastic case called Walter Lilly and Mackay. And in this case, there was a rather larger than life character in Mr. Mackay who didn't find favour with the High Court, if you read the judgment, especially from Mr. Justice Aikenhead. And I think that's partly because he did things like send emails to people saying, my middle name is Ruthless, and that the closest you'll ever get to Ferrari is a toy one. And so he kind of painted a picture of himself being unreasonable. And in this case, Walter Lilly, the contractor, was claiming extension of time and loss and expense, and Mr. Mackay dismissed all of the claims completely. He actually got some advice from a third-party claims consultant, spent about 700 grand on that advice, told the advisors that he thought they were completely wrong because they'd said that the contractor has entitlement, sacked them, and then the first thing that the contractor did in the case is to ask for copies of these reports saying that they weren't legally privileged. And Mr. Justice Aikenhead in that case agreed with the contractor, and they had to hand over all of these reports, which of course then proved the extension of time on their behalf, which was fantastic for them. So there's a lesson learned in there about making sure that if you ever get advice in relation to legal issues or issues that you may think may go to a dispute at some point, make sure you do it through your solicitors. Give me a call and I'll instruct someone for you, and then you can rely upon privilege. If you don't do that and you go off and instruct anybody and you don't like their conclusions, then I'm afraid you may have to produce them to the other side if they get wind of it, or it may just come out in the wash when it comes to disclosure in litigation. So in this case, Justice Aikenhead actually awarded what was originally described by the employer's solicitors as a global claim, but actually Justice Aikenhead said it wasn't really a global claim. There was plenty of particularization in it. It wasn't perfect and fully particularized, but there was enough for it to succeed. So he said that there was a comprehensible case in relation to delay, and the case for extended preliminaries in profit and overhead was related solely to the periods of delay for which it asserted it was entitled to extensions of time. So the criticism was, well, you've claimed an extension of time and then you've just said, right, and now I want my prelims, and that was a criticism. But the court said, well, actually, there may be some merit in that. The subcontractor claims were largely based upon extension of time and not to the sums actually paid, if not yet paid, due to the subcontractors or subcontractors. And so effectively, what happened was the claims were successful because what the court said was there was sufficient link between the complaints made and the extra costs that were incurred. So in terms of what has to be proven, going back to basics again, the key things which you're going to have to show for a loss and expense claim is, first of all, the events occurred, factually occurred, by way of documents, ideally, that were created or produced at the time when things happen, which entitle you to loss and expense, and then that those events actually caused the disruption or delay that you're claiming, because it may have been that there are other causes. For example, your own failures, such as failing to get staff or cash flow, or various other reasons may come into it. And that such delay or disruption caused it to incur the loss, so that allegation then led to the extra cost being incurred. These are what's known as the causal links between the events and the losses claimed. And if you can establish these things, then you're in very good stead for bringing a successful claim. The other thing to remember is, and I mentioned this earlier in respect of notices, obviously to comply with any contractual restrictions in the contract that are specified. Obviously, if you're making a common law claim, you don't have to worry so much about those provisions at all, unless they remove certain rights. But if you're making a claim under a contract, you have to follow the contract process. And if you don't, and the contract says you can't make any common law claims, for example, you may lose all of your rights by simply not following the process. So it's very important to be familiar with contract provisions from the outset of a job. Make sure that notices are given, records are kept, and that notices and claims are made at the right time. Not always the most easy thing to broach with your other partners when you're working with them, but ultimately that's what the contract requires. So don't be shy about making these claims. You can say, we'll make the claims, we put the paperwork in, and we can do a deal later. But ultimately, what you don't want to do is say, well, don't worry, we'll do a deal later, and not put the paperwork in, and then find later when you do want to make the claim that you can't because you're too late. So always keep your powder dry in terms of the contract processes. In terms of evidence, as I mentioned, the best quality evidence is evidence that's created at the time when things happen. That has the most weight because it's seen as most likely to be true. And so making records, creating records of events that support you are very important. Equally, being tactical here, it's not very wise to create records of things that aren't in your favour. So don't go record crazy in respect of things that may undermine your case. So that's a tactical point in terms of the evidence that you create. So in Water Lily, the court confirmed that there is nothing wrong in principle with a total or global cost claim. However, it pointed out that global claims do present an added evidential difficulty which may be overcome, namely that a contractor will have to establish that the loss which is incurred would have not been incurred in any event. That's the key challenge. Would the losses that are being claimed have been incurred in any event? And if they would have been, then I'm afraid the claim will fail. The other point to make is that if you're claiming loss of profit, then equally you're going to have to show that your tender was sufficiently well priced to have allowed you some net return on a job. And if you can't show that, and I know there are some tight profit margins out there on jobs, then you may not have a claim in any event. So in terms of making these global claims, whilst they can be criticised, they don't always fail. And actually, if you can pull together a series of facts, you can prove that these events have occurred and that they've contributed or caused the claim, then ultimately it's not the case that just because it's not completely particularised that it's going to fail. It will very much depend upon the impact of the events in question and the quality of the records. Obviously, the better way, the more convincing way of proving a loss is your actual loss. And if the court looks at a global claim and says, well, you could have put together actual loss here without too much trouble, they're not going to be very impressed, and you may find that your global claim fails. So there's no need to go down the global cost claim route if there's actual cost and individual loss events can be readily or practicably determined. So I would recommend that you start in seeking to establish the actual loss in respect of a claim first, and only move to a global claim if that's not possible or practicable in a cost-effective way. In terms of what the Society of Construction Law says, what it says in terms of global claims, that the contractor must be aware there is a risk that a global claim will fail entirely if any material part of it can be shown to have been caused by a factor or factors which the employer bears no responsibility, and it's not possible for the CA adjudicated judge or arbitrator to assess the value of that non-recoverable portion on the evidence available. So that's a key point about where a party making the claim has contributed some way, or a third party has caused the loss to be incurred. If that's the case, then unfortunately such a claim is doomed to failure. The other point was interesting that was raised in Water Lily was that that you can't rely upon a global claim where you've created impossibility. Actually, the court said, well, that's not necessarily true as long as the contractor was acting reasonably. So the judge said that a contractor can recover overheads and loss of profit caused by a delay if the delay in question was caused by factors that entitle it to loss and expense. So if you've just proven delay, so long as those same events apply to loss and expense, so they were breaches of contract, then you can recover your overhead and profit. The burden is on the contractor to prove that if the delay had not occurred, it would have secured other work that would have generated a return. So if you're claiming loss of profit, the contractor has to show that they would have secured that other work. And if you can, then you're in good shape for your claim. And the third point made by the judge, which I'll come on to in a moment, is that formulae, which is available out there to calculate by way of mathematical calculation, such as Hudson or Emden's formula, can be legitimate means for a contractor to prove entitlement to loss and expense and overhead and profit. So long as you've established those factual points previously, you can then apply the logic of these formulae because it's a cost-effective way of calculating it. And fourthly, a contract administrator does not have to be certain of the loss of profit and overhead in order to ascertain them. They can be reasonably convinced. In terms of what you can claim then, we're talking about either prolongation costs, which is, if you remember, in relation to the delay period, thickening costs, which are extra preliminaries that could be within the original contract period, increased costs, which would be within the delay period normally, and then loss of overhead and profit. Again, in the delay period, you have to prove that you would have had other opportunities that you could have secured and you would have made a profit on. So finally then, looking at these formulae to apply, if you've got the factual basis of your claim correct, you could then look to these formulae to calculate some elements of loss, overhead and profit. Hudson's formula is the basic one, and it's a case of taking your overhead, your head office overhead, plus your profit, divided by 100 and times the contract sum, and then divided by the period in weeks for the works, times the delay in weeks. So you effectively get a proportion of your overhead for the delay period. Criticism of that particular formula is that ultimately it doesn't take account of actual turnover, cost and profit within particular periods or for a particular job. So if you want something more detailed and more persuasive, in my view, you'd look at the Emden formula. And the Emden formula, you can see, relates to the total annual head office overhead costs and profit from your audited accounts. So they're actual account figures. You've then got the total annual turnover of the claimant. So you're looking again at audited accounts to establish what proportion of your total turnover your overhead and profit is. And then what you do is you establish the head office overhead and profit as a percentage. And then you take the original contract price, the original contract period, divide the two, work out the period of delay, and then you can apply your percentage for the head office overhead and profit. And that will be an audited amount of overhead and profit. So it's a more accurate figure overall. And that's a good way to establish your entitlement to those losses, where you can establish, based upon the facts, linking cause and effect, that nature of claim is recoverable. Finally, just looking at the distinction between those events under different forms of contract. Under the JCT, you've got instructions, variations, changes, access problems, and force majeure, which relate to relevant matters. So this is about proving delay and proving your entitlement to an extension of time, which is a defence to delayed damages, as I mentioned earlier. It's worth noting that force majeure, which could be relevant to the coronavirus and the lockdown period, is not something that gives rise to an entitlement to loss and expense. And so under the JCT contracts, strict entitlement is to an extension of time, but no money. There could well be amendments to your contract, and equally, if you've been given instructions, for example, there may be arguments about bringing it within the loss and expense provisions, but that'd be a case of having to look at what's happened and look at your contracts, something that I've been doing a lot of, reviewing contracts and advising clients on these types of claims. Under the NEC contract, it's all time and money. So compensation events are for the same nature of issues. And in that case, you can claim your time and money, your loss and expense, your disruption, as well as your time-related prolongation. So there's very much a separation of time and money under the JCT, and under the NEC contract, they're always taken together in respect of compensation events. And then I thought I would finish on a current affairs case. I managed to find a case from 2013, Clifford Gardner and Clydesdale Bank, which, although it wasn't an operative provision of the judgment, did say in the obiter comments that a flu pandemic, such as the coronavirus now, is a form of force majeure. And so therefore I do think it's likely that if it ever came before the courts, if there's any doubt, that the coronavirus is probably a force majeure event. There's one other case which relates to the coronavirus, which may be of interest, which is Milcrest Developments and Waters from 2020, where a party sought to prevent an adjudication from proceeding on the basis that it was all too difficult to respond during lockdown, and there would be a breach of contract, breach of natural justice, sorry, to actually do so. And the courts threw that out. They said, no, I'm afraid that's no excuse, and the show must go on. And so that's a reminder that adjudication proceedings will not be easily avoided, and they will continue come what may, whether in lockdown or not. So in conclusion then, thank you very much for listening. I hope the seminar's been useful. Claims for extensions of time and for loss and expense are distinct concepts. The key to loss and expense claims is very much understanding your rights under the contract, understanding your common law rights, and then it's a question of proving that these events occurred, and then linking the cause, which is the proof of what's happened, with the effect being the effect on the works, the effect on the resources, loss of opportunity, loss of profit, prove it with examples, and then show your actual loss. And if you can demonstrate all of these basic elements and the facts that relate to them, then there are other avenues available to demonstrate the loss, such as the formulae that I've taken you through tonight. So I hope that's been useful. I'm going to hand back over to Julie now to see if you've got any burning questions which need to be answered.
Thank you, Ryland. That was great. Okay, we've got a couple of questions. One here, how are unliquidated damages different to a penalty?
So unliquidated damages are general damages, and they are damages that you can prove have been incurred as a result of a breach or an event under a contract. So general damages is as long as it's not reasonably, as long as it's reasonably foreseeable and it's not too remote, that you can recover it at law. A penalty is more about where you've agreed that a particular level of damages in a contract will apply. Let's say, for example, the parking ticket in the parking ticket case was actually for £1,000. The courts would have looked at that and said, well, hang on a minute. There's no way you can justify £1,000 for one parking ticket, and therefore it would have been disproportionate. It wouldn't have been a legitimate business interest, and it wouldn't have been a genuine, reasonable pre-estimate of the loss. So it would have been a penalty. And if anything's a penalty, if it goes way beyond what is reasonable and it becomes a punishment for doing something wrong, then it will not be enforceable in English law. It would simply become null and void, and a party won't be able to rely on it.
Okay. Another question we've had here, under an unamended JCT contract, is a contractor entitled to any financial reimbursement as a consequence of COVID-19 on an existing current project? For example, loss and expense, increased health and safety provisions, implementing social distancing measures, including prolonged contract period, etc.
Yes. A nice short question there, Julie. Yeah. So the answer to this is it depends on how COVID-19 has been treated by the client. So the smart clients have been saying to contractors, well, I'm not making any decisions. This is a force majeure event, and it's down to you, Mr. or Mrs. Contractor, to decide how you're going to manage it. Those employers can pretty much get off the hook, because what they're saying is it's a force majeure event. Now, under the JCT, unamended, as per the question, that will only give you an extension of time. It won't give you any loss and expense. Now, the question then becomes what happens in other examples. So some clients or main contractors have given instructions to leave site. First of all, during lockdown, I'm instructing you to leave site. If there's been an instruction, then clearly an instruction can be grounds for a relevant matter, which can give rise to a loss and expense claim. Equally, if there are instructions saying about how to undertake the work now, by way of, as you mentioned, social distancing or additional health and safety that's required, that could be a variation, it could be a change to the scope of works, certainly a change to the conditions under which the works are undertaken. So it will be dependent upon how the changes to the way that the work are undertaken have come about. But there are certainly some good arguments to be made under the standard form of the JCT that the changes in the working methods are required, and they are variations. But as I say, if you're not instructed to do so and you take it upon yourself to do it, it becomes a much more difficult argument to make.
Okay, thank you very much. That clears up the questions that we've had this evening. So thank you for that, Ryland. Thank you for your time. Thank you everyone for joining us. We do not have any seminars in August, but we will be back again in September, and the September-October schedule will be released shortly. So keep an eye on your email inboxes for details of that. In the meantime, we wish everyone safe practices around the city. If you're back on your site, hope it's all going well, and we will see you all again soon. Thank you for joining us.
Thank you, Julie. Thanks, everybody.